Hello traders and welcome back to the Forex Geek. Today we are diving into an essential candlestick pattern that can significantly enhance your trading strategy. So we're talking about the counter-attack candlestick pattern. So this pattern is a powerful tool for identifying potential market reversals, and understanding it can give you a crucial edge in your trading decisions. So make sure you watch until the end as we will explore how to recognize this pattern, its characteristics, and effective trading strategies that can help you take better trades. So without wasting your time, let's get started. So first we are going to talk about the pattern overview, understanding the pattern and its characteristics. So let's get started. The counter-attack candlestick pattern is a significant signal in trading that indicates a potential reversal in the market. So it consists of two candlesticks that form in a specific way, and understanding this pattern can help you make better trading decisions. So the pattern can appear in two forms: the bullish counter-attack pattern or the bearish counter-attack pattern. As you can see on my chart, I have two candlestick patterns. So this is the bearish counter-attack pattern, and this is the bullish counter-attack pattern. So the one on the right is the bullish counter-attack pattern, and the one on the left is the bearish counter-attack pattern. So I'm just gonna delete these circles. So for the bullish counter-attack pattern, let me explain. So we're talking about this one right now. So this pattern occurs during a downtrend, and it starts with a long bearish candle, which indicates that sellers are in control. And the second candle is a bullish candle that opens lower than the previous candle, which is this bearish candle, but closes near its high. It gaps back up. As it gaps, it opens with a gap, but treads its way back up to close near the low of this bearish candle. So it could be exactly at the low of the close of that candle, or may just have a little space, or it could also trade into the previous candle's body also, but not too much into it, like no more than 50% of the previous candle. So but it's better you find candlesticks that trade that closes very close to this the close of the first candle or the previous candle. So the closing position suggests that buyers are starting to gain strength and may push the price higher. So this is why it's called the counter-attack. And for the bearish counter-attack candlestick pattern, it appears during an uptrend, and it begins with a long bullish candle showing that buyers have been driving the price up. So the second candle is a bearish candle that opens higher than the previous candle, but closes near this first candle's high or close. So this closing position indicates that sellers are beginning to take control, signaling a possible price decline. So recognizing these patterns is crucial for traders looking to identify potential reversals in market trends. So by understanding the characteristics of both bullish and bearish counter-attack patterns, you can better position yourself for successful trades. So let's quickly hop on the charts and look for this candlestick pattern. So I have one right here. This is the bullish. For the bullish counter-attack candlestick pattern, you can see we are initially bullish, and we just have this pullback. Price is bullish, and we had this minor pullback right here, and this was just a sign to show us that this pullback is done and we should be looking for a push to the upside. So we're able to know that using the bullish counter-attack candlestick pattern. You can see this bearish candle, very long bearish candle, and the open of the next candle was actually here, which means that this candle gapped below and opened here, but buyers were able to push the price back up to close it near the close of the previous candle. So this means that buyers are now looking to take price upwards. It's like a counter attack. We are initially bearish and now we are bullish. So this is the actual close, and we'll talk about the trading strategies in a bit. Let's just look at another example. You can see this one, we are bearish here, and remember the overall trend is bullish, so this was just a pullback, and it was an indication that we should be looking to continue the uptrend. If you use the Fibonacci to check this, you're gonna see that this falls in line with the 61.8% Fibonacci ratio. So this is a valid area, a valid zone to be looking for buy trades to take out this high and continue the uptrend. So at this support level, we had this bullish counterattack candlestick pattern, which is an indication that buyers are stepping into the market aggressively. And you can see we had this gap price, the price of the bullish candle opened here and closed near the close of this candle, although it gapped a little bit, but it's still below the 50% of this candle. So this means that buyers are now in control of this market, and is a bullish candlestick, bullish counterattack candlestick pattern, and we should be looking to take buy entries from there. So we're going to talk about the trading strategies in a bit. Let's just look at the bearish example of the bullish, the bearish example of the counterattack patterns. So this is a bearish example, and you can see here we are bullish. Actually, let's just zoom out to know what exactly is happening in the market. You can see this is a major resistance zone. This is a major zone in the market, and we expect price to come back to this zone and hold, because this zone has been tested multiple times in the past, and we should be looking for sell trades from this zone. So zooming into this, you can see this bearish counter-attack candlestick pattern, and we have this bullish candle, and we have the next candle is a bearish candle that gapped upwards but closed bearish, very close to this close of this first candle, and that means that sellers are now looking to push this trade lower. We should be looking for selling opportunities in the market. So let me just look for another example. So let me look for another example. Okay, here we are bearish. We're bearish here, as you can see, and we had this minor pullback, and you can see this. Let me just draw this zone. This is a major zone which was support initially, but now is resistance, and price is now giving us bearish activity and bearish order flow. And you can see we had this retracement back into the zone to continue the sells, and now you can see inside this area, inside the zone, we had this bearish counter-attack candlestick pattern, which is denoted by this bullish candle which closed, but the next candle gapped above it, and we have the close we had the close of that bearish candle very close to the close of the first candle, which is the bearish counter-attack candlestick pattern, and we should be looking for potential selling opportunities from here. So how can you use this candlestick pattern to trade? Okay, the first step is to identify key support and resistance levels on your chart. So you should analyze the chart with price action, the normal support and resistance levels, advanced support and resistance levels, and if a counter-attack pattern forms near these levels, it can provide stronger confirmation for potential reversals. So for bullish counter-attack pattern, you could consider entering a trade by waiting for the confirmation of the next candlestick. So if the following candle closes above the high of the bullish candle in the pattern, this is a strong signal to enter a buy position. So you should wait for the next candle to close above the high, and you can see the next candle actually gapped above the high. So we're looking to just take a buy trade. Remember, this is in line with the trend. Remember, we are bullish, and this was just a minor pullback. So this is in line with the trend, and we should be looking to continue this buy trade. So for this one, had this Fibonacci, remember, and our price is reacting from the 61.8 Fibonacci level. So we should wait for a close above the high of this second candle, which is it will help us confirm if we are actually bullish. And you can see from there you could consider entering a buy trade from the close of that confirmation candle, stop loss just below this low, and you can set your take profits at the highs, the swing high, or you could just aim for 1:2 or 1:3 risk to reward ratio. So that's how I would have been able to take this trade based on the bullish counterattack candlestick pattern. So let's talk about entry strategy for the bearish counterattack candlestick pattern. For a bearish counterattack pattern, you should look for a confirmation from the next candlestick as well. So if the next candle closes below the low of the bearish candle in the pattern, this indicates a good opportunity to enter a sell position. So for this one, you can see at this candle close here, and we could consider entering a sell trade at that close. Stop loss is just above the highs, swing high above the pattern, and you could set your take profits at 1:2 or 1:3, or you could look for key resistance levels like this one, key support levels like this one, to set your take profit. So that's how we're able to use the bearish counterattack candlestick pattern in this case. So for this one, remember the first step is to spot support or resistance key levels. Then you should look for the counterattack candlestick pattern to form in these zones or these key levels. So for this, we are looking at the bearish counterattack candlestick pattern, you can see, and we should wait for a close below this low. So the next candle didn't necessarily close below that low. The next candle was a doji, but the following candle after that gave us the confirmation we needed with a shooting star candlestick pattern and closing below the low of both the first and the second candle. So this was a confirmation to enter a sell trade at the close. Take profit could be a 1:1 or 1:2 risk to reward ratio, depending on your strategy or your appetite. And you could just set your stop losses above the high of the counterattack pattern. So that's how I would have been able to capitalize on this trade using the bearish counterattack candlestick pattern. Set your take profit at support levels, key support levels like this for this trade. So that's how you can trade using the counterattack candlestick pattern, both the bullish counterattack candlestick pattern and the bearish counterattack candlestick pattern. So confirmation indicators could be volume analysis and momentum indicators. You should always look for higher trading volume during the formation of the counterattack pattern, so this can add credibility to the reversal signal. For example, here we had this here, and you have this is where we had the pattern, and you have this increasing selling volume right where we had this pattern. You can see this spike in selling volume there, confirming that yes, we should be looking to sell or follow the big money traders who caused that spike to sell the market. This is a confirmation that sellers, big players are entering the market. And let me just look for another example for the bullish case. You can see at the formation of this candlestick pattern, you can see increasing buying volume right there. You had this pattern right here, and you can see it corresponds with this increasing buying volume. You see this spike also, and also for further confirmation, you can see increasing buying volumes also after the counterattack candlestick pattern. So that's how I would have been able to trade with the bullish counterattack candlestick pattern in this scenario. You can also use indicators like the RSI or the moving average or the MACD to confirm momentum shifts that align with your identified patterns. So by applying these strategies when trading with the counterattack candlestick pattern, you can better position yourself for successful trades. while managing risk effectively. So always remember to analyze market conditions and use confirmation before making any trading decisions. So right traders, we've come to the end of today's video on the counterattack candlestick pattern. Remember to look for the key characteristics of both bullish and bearish patterns and apply the trading strategies we've discussed to manage your risk effectively. So if you found this information helpful, please like this video, subscribe to the channel, and turn on the notification bell so you never miss an update. Thanks for watching and happy trading.